last the tweet I originally put out. I had to actually like restart this space. I just pinned that up top. And yeah, before we get going, Evan, how you doing?
I'm doing good, dude. Excited to hear about this space. Yeah, no, I'm excited to listen in. Financial literacy is a very important general topic. Excited to hear what these different people have to come in and bring.
Perfect. Okay, let's get rolling with it then. We did one of these a while back, and I think we're going to have to schedule another because we really do have a lot of quality speakers that we had lined up. Unfortunately, we're not able to make it. Hoping some of them will still pop in, but we have a great panel up here regardless, and we are going to dive into it. Let's start out with yourself, Dividend Hero. We were kind of chatting about this, and I'm glad we're in it. So, floor is yours. If you want to take 7 minutes, 9 minutes, 10 minutes, whatever you like, kind of go into your dividend strategy. And if you want to branch in other areas of financial literacy, feel free.
Hey, awesome. Yeah, thanks for giving me the floor first. I know the room is a little bit less crowded today. But hey, we'll make the best of it, make it worthwhile for everybody that's listening in. I know we still got some great speakers up here. So, yeah, what I kind of wanted to cover today, I get a lot of questions about this in my DMs, and I see it on my timeline all the time. But everybody seems fascinated by the topic of monthly paying dividend stocks or ETFs. Um, everybody's looking for something that pays monthly, and I see it and I get the premise. So I kind of want to do a little bit of research on it and then kind of dive into it a little bit, kind of see um, what the advantage is, what the strategy is there. Um, so just a brief overview. I own one monthly paying dividend stock, Realty Income. Um, it's actually known as the monthly dividend payer. If you go to their website and you go to the investors portion of the website, that's like their nickname. But there are plenty of examples out here. I'm not planning on going into details about certain specific stocks. I certainly can if that was the point of my topic, but that's not necessarily what I'm planning to do today, or to give any kind of recommendations or ones that you should look into. Um, but I mostly wanted to kind of go over the dividend strategy, and how monthly payers fit into that, um, and some pros and cons of that. So as I'm sure many people listening know that, majority of stocks pay dividends quarterly. So once every 3 months or so. It's all very public information. If you want to know when a company's paying out a dividend, you just Google XYZ company dividend date. Um, and so, um, where was I going with that? So normally they pay quarterly, but there are companies that pay monthly. Um, I own one, Realty Income. There's a handful that I can think of off the top of my head, but I feel like I'm always seeing ones on the timeline, or ETFs or things like that pay monthly. Um, and so, in the short term, that strategy is gonna provide some pretty quick liquidity, some pretty quick cash. And in the long term, monthly paying dividends are ideal for a person who is retired or living off their dividends, or dividends are a significant portion or just a portion of their income. Money coming in monthly is about as close as you can get to, when you're not working, having cash flow, building future cash flows for yourself. So it is a great tool to keep in mind, and that getting a monthly paycheck, can be a powerful asset. But on the other hand, if you're really into your finances and you're really into budgeting and planning for the future, you ought to be able to manage a quarterly dividend and budget appropriately. And so quarterly is by far the most popular and most common, um, dividend that's paid. Um, so if you're on top of your finances, like I said, if you're able to budget and plan for 30 years down the road, I think most people can budget for getting a quarterly dividend versus a monthly. Um, but it is a nice little option to have. Um, so one thing I did want to go over is, you know, does it actually make that big of a difference? Um, I'll post a thing about it tomorrow, so be on the lookout for that. I'll post a little bit of the math, but I did find a really great article with some really good math breaking down, um, really the if when a company pays a monthly dividend, it's technically going to compound faster. It's technically going, you reinvest your dividends every month, um, until you start collecting your dividends. But until then, you're reinvesting your dividends, and if you do that monthly, on paper, um, yes, you will compound slightly faster, and that might provide slightly more returns, but they're really not significant enough to adjust your whole strategy to a monthly dividend strategy in hopes of achieving any kind of getting ahead or outperformance or anything of that nature. But I found a great article that broke down the math of investing $10,000 um, in a fund that pays a 12% yield per year, and what the math would be if it paid monthly versus if it paid monthly and you reinvested dividends versus if it paid quarterly, um, and you reinvest the dividends, and the difference was about $400 in favor of the compounded monthly after 10 years. So they did the math all 10 years out, and the difference was about $400. So $400 over 10 years really isn't groundbreaking. So all that to be said, that a monthly dividend can provide a better um, future cash flow, but you're really not getting ahead, or you're really not finding some kind of cheat code or working the system by solely switching to and investing a large amount of capital in monthly paying dividend stocks. What I really want people to pay attention to, and what I really wish I saw more on the timeline, and I do see plenty of it, but what I really want people to focus more on is um, invest in quality dividends. Instead of focusing on if this pays out monthly or quarterly, focus on companies with a solid dividend, really good financial statements, really good long-term outlooks, and dividend safety. And that is really where you're going to find more return, more return on your investment in the long run than focusing on, hey, does this fund pay monthly or does this fund pay quarterly? So it's actually my pinned tweet right now, how I evaluate dividend stocks. But there's three metrics that I like to look at um, when I do a quick evaluation of a dividend stock. I mean, there's so many metrics and ratios you can look at; it can almost be overwhelming. So I just kind of wanted to go over three briefly. But one that I like to look at is payout ratio, and so this tells us what percentage of net income is paid out in the form of dividends. So I tend to look for a percentage between 30% and 50%. Now, this does not apply to REITs, real estate investment trusts. They are legally obligated to pay out 90% of their net income in the form of dividends. So just keep that in mind. If it's a REIT, they have their payout ratio is going to look a little funky, but that's how their business is structured. Um, and so I always look for a payout ratio between 30% and 50%. And so this means that they're paying out 30 to 50% in the form of dividends, and then they're able to keep the rest, to have some cash on hand for emergencies, things like that, and then they're able to reinvest some in the business. So they're paying out, a nice dividend, but they're also able to grow the business, things like that. The next one I look at is dividend growth rate. So I like to invest in companies that have a proven track record of raising their dividend. Um, and so I always look at the dividend growth rate, the dividend history, usually a 10 year dividend growth rate, if applicable. it really gives you a good insight of how the business is performing, how much cash they're generating, um, things like that. And then the last one is dividend yield, and that's really the one that most people look at and they focus in on because it's usually right in front of your face on your, when you look up a stock, the dividend yield is always right there, and that really is just a simple calculation of taking the yearly dividend and dividing it by the stock price. So if the stock price goes down, the yield will go up. So dividend yield is a good quick glance, and you can look and say, okay, um, here's the yield. It kind of gives you a rough idea of how the payout's going to be. But then I always try to look at what is the historical yield of this stock. So think of something like, Waste Management is my go-to. It normally trades at like a 2% yield, right? So if it's at a 1.5% yield, okay, the stock price is trading way above its historical average relative to its dividend payout. And so I can be like, okay, maybe this is a little bit overvalued right now. Or if I know Waste Management's trading at a 2% yield and it's at a 3% yield during a big sell-off, I'm like, okay, it's just one quick metric to look at. So I like to look at dividend yield and historic dividend yield just really as um, a quick glance into strong dividend paying companies, which in my mind are going to be your best bet over a monthly paying company. Um, but that being said, monthly paying dividend stocks are nice to have in your back pocket, but I wouldn't make it a core part of your investing strategy.
Yeah, really well said. When we come back, and because we're going to continue going along, when we come back around, I would love to hear. I know you mentioned it wasn't, a specific part of your game plan, but maybe a few stocks, dividend stocks specifically, that fit into the mold of the strategy which you just outlined. And those NFB, it's not like a recommendation, but just like, hey, here's a few that kind of fit in, and here's why they fit in. When we come back around, would that work?
Yeah, absolutely. No problem.
Perfect. Thank you, sir. Love it. Okay, Colin, we're coming over to you. I asked you kind of more broadly on, fundamental analysis, but as we were in the DMs. If you want to hit on a couple different topics, right? We had speakers that were supposed to talk about, mindset and index funds and all this stuff. So if you want to kind of book some of those in, that would be awesome.
Yeah, no problem at all. I kind of want to talk briefly about fundamental analysis, but I really kind of want to hit on, and that's why I sent you the DM, because I know that someone was supposed to hit on, like a mindset for wealth building and habits. And I think that's, fundamental analysis is important, but the mindset is the most important aspect, in my opinion, of investing. And so, so I'll briefly kind of go over fundamental analysis and just an overview of what that is. So when it comes to investing, there's really two big ways to analyze or to invest, I guess. And that would be to do fundamental analysis or technical analysis. So when you think of technical analysis, or what technical analysis is basically you're sitting there and you're, the videos you see that people are, watching charts as they're, the 1 minute chart, it's going, red candlestick, green candlestick. What's the, 50-day moving average, the VWAP, all these terms that, are thrown out there and kind of help you in a day-to-day broken down minute-to-minute analysis of a stock. You're not really looking at what that company is doing per se overall, what's going on in the industry, what's going on in the economy as a whole. You're more really looking at like that one individual stock, and you're basically trading it is what technical analysis is usually used in that sense of like being a trader. But obviously, excuse me, I'm not a long-term trader, or excuse me, I'm not a trader, excuse me. I'm a long-term investor, decade investor. And so fundamental analysis essentially where what you're doing is you are measuring the intrinsic value of a stock, of a company, and you're using basically everything from zoomed out picture, the economy, all the way down to the sector that company's in, all the way down to the individual company, and kind of like the management that's running the company. So you're looking at a zoomed out level all the way down to the company level, and so that can run in the sense of company level. You're looking at certain sheets, so financial statements. So you're looking at the 10Ks. You're looking at what their balance sheets looks like. You're looking at their competitors. You're looking at, hey, Tesla, for example, has, I don't know the number off the top of my head, but they have a large market share of the electrical vehicle market. But it's slowly dwindling down as other automakers are stepping in. So, how's the competitors of that company doing? How is that affecting that company that you're looking at? You're looking at the industry as a whole. Example, keeping it kind of similar with electric vehicles. Right now, 2021, about 7% of total new cars sold were electric vehicles, and it's going to be estimated that 48% of all new cars sold will be electric vehicles in 2030. So in the next 8 years, that 7% is going to grow to 48%. So that's, that sector, that's a really, really positive outlook, and an exciting thing about that. So you're measuring the sector, news or what's going on in the sector, as well as the economy, right? So we all know what's going on in the markets right now. You're looking at that as well. So with the fundamental analysis, one thing that I personally like to look at is really, I throw a lot of things together, but the one thing I really enjoy looking at is the management of that company. For me, I believe that, I'm investing into a company. I'm, becoming a shareholder of that company. I want that to grow. Like, no one invests into something because they want it to go down over the long term, right? You're not buying Apple because you hope in 5 years the share price will be $50, right? We invest because we want it to go up over time. So you're putting your money somewhere where it's going to grow, or at least you hope it's going to grow. So who are you trusting with that money? You are the CEO of your life, but who is going to be the CEO of the money that you're putting into that company? And so I really like to look at the management and see what they are doing. Is that management trying to expand on, that company and what they're doing and grow the company? Now, the job of a CEO is to keep shareholders happy. So they're always going to fluff up things and make things, sound great when they talk. But really, you have to be able to kind of sift through the BS, for lack of better terms, and see exactly, are they putting their money where their mouth is? So, for example, Johnson & Johnson is stock I use a lot to explain what this is. Johnson & Johnson is a massive company, right? It's a conglomerate pharmaceutical company. Just you probably have one of their products in your house already, if not multiple products. And a company like that, right? Obviously, their growth potential is not going to be the same as like a Celsius or a smaller company. But even with Johnson & Johnson, is their management still trying to find ways to grow? And so I read an article, at this point it's been a few months ago, but where their management, right, a massive company, their management is still finding ways to step into technology in the medical space with like robotics and that kind of technology aspect. And so a company that's already a massive company that a lot of people probably have shares in, if not if you're invested into a broad market ETF or index fund, you are indirectly invested into Johnson & Johnson. But are they still trying to grow, right? You're not sitting there looking at the chart, reading the candlesticks and reading different technical indicators. You're looking at the value overall of the company. Like, for example, Johnson & Johnson's share price right now is $172. And so do you believe that it's valued, or in the future will be valued more based on the actions that they're going to be taking? And so that's just kind of a brief, I know that was kind of rushed, but a brief overview of fundamental analysis. And it's the opposite of sitting in there reading charts. It's the idea of where you're going and you're reading about the company, you're reading about the industry overall. Like when I, tossed out those numbers with the electrical vehicle market, I would, I can't see that on a chart. No chart's going to tell me, if I type in Tesla stock, it's not going to say, oh, electric vehicles are going to be estimated 48% of the all new cars sold in 2030. However, you have to go and dig that up, for lack of better terms, that yourself. But that can be a reason why you would want to invest into a Tesla or another electric vehicle automaker or electric vehicle, parts company or a charging station company, something like that, because of information you found that's going on in the sector overall. But I kind of want to focus now on the mindset in investing, because this is one of my favorite things to talk about. And in a selfish way, I'm glad that I'm not glad, but our speaker wasn't able to talk about it. And so I'm happy I can kind of touch on this because um, I always tell people this, man, like I'm 23 years old. So I'm a young investor, right? But the key is this, is it doesn't matter what your age is. If you're 20, you're, 18, you're 48, you're 68, money is all a mindset. That's all it is, right? And building wealth is a mindset game. And I think a lot of people, especially here on Twitter, and we can probably all attest to this, is it feels like everyone's ahead, right? Even me, like if you follow me and you know like what I share, honestly, I feel like I'm behind sometimes because of what I see with people that are younger than me, right? You can easily feel that. You feel like you're behind because on Twitter, everyone's a multi-billionaire. It seems like, no matter if they're 18 or 40, it seems like everyone's like that. But the truth of the matter is this: is that when it comes to building wealth, we have to, everyone wants to be rich tomorrow, and that's by having that mindset of wanting to be rich tomorrow. Most people never become wealthy over time because they're like, okay, I'm not going to be rich tomorrow, so why even waste my time investing into something? And really, you have to be able to have that long-term mindset. You have to be able to have the mindset of like, hey, it's going to take me, let's just say I run the numbers and what I'm investing right now is going to take me 30 years to hit where I want to be. And that can be discouraging where it's like, man, I have to do this for 30 more years for me to hit where I want to be financially. But if you never start, you're never going to get there anyways, right? And who's not to say that in 3 years you land a better job, you pick up a side, hustle or side income where it's paying you where you can invest 2 times the amount, 3 times the amount. You pick up real estate or other, cash flowing opportunities where you're able to invest more money, and that 30-year time frame now gets lesser and less because you actually started and you change your mindset from an idea of I'm never going to get there to, okay, I'm just going to start with what I have today, and then if it takes me 30 years, at least I'm going to get there in 30 years. But who doesn't say that in 3 years, like I said, something else happens where I'm making more money, I can invest more money, right? But if you're just closed off in the wealth mindset and you're just like, you know what, like, it's going to take me 30 years. I don't want to be rich at 50. I want to be on the beach at 30 or at 40 and, never have to worry about anything again. But that's not going to happen because I can't do it with what I'm investing right now. So I'm not even going to do it. Like that mindset is not going to get you anywhere, right? So the wealth building mindset is the double-edged sword is, everyone talks about this. I say it too, like anyone can do this. If you have a long time horizon or you have money to invest, like anyone can do this. But also, not everyone does it because not everyone wants to wait 40 years, which, we all don't want to wait 40 years. But the key is if you never start, you're never going to get there, or you're never at least going to get in the mindset to find new opportunities to increase the wealth that you can build. And so, yeah, I think the mindset is definitely the biggest thing with wealth building. And, a lot of people want to be rich tomorrow, but that mindset can cause you to never get wealthy because, it's why wait 20 years, why wait 30 years? But time and time again, studies show that majority of people, and this is not to be discouraging, but the studies show that majority of people hit that millionaire status, that coveted number, right? That big number later in life than earlier in life. And so, not saying you can't be the one to do it before everyone else does, but just know that if you feel behind or you feel like it's not, it's going to be forever away, like, but you've already started, you're on the right path and you have the wealth mindset, and, keep going and keep chugging along because, it's going to take time, it's going to take years, but again, you'd rather have it in 10 years than try to get it all tomorrow and then just quit and never have it ever. So that's kind of my wealth mindset and then fundamental analysis breakdown as well.
Really, really good stuff there. Love the fundamental stuff. We've chatted about that before. Haven't had the chance to hear from you about the mindset stuff before, but can completely relate to it. What I try to do is when I find, and maybe this is, I don't know if this is the best way to go about it, but it's just to flip things onto the positive, right? And you and me, we both look and we're like, oh my God, there's like a 14-year-old making like $2 million off of NFTs. And we're kind of, blowing our minds over that. But then at the same time, I like to look out and be like, okay, well, like, how about all these people? They're like 28 And not that it's like, not that they're not doing good, but I'm looking at them going, okay, where were they when they were our age, right? Like these people that, are 28, 35, 40, where were they here comparatively? Like we have a great chance to, be there, especially if we learn from them. So I kind of just like try to flip my mindset instead of looking at the people that are me. I try to think, one, what can I do to help them because what they're doing is great. But then two, the other way is like, how can I find the people who have been in my spaces, probably been in my spot, looked at people younger than them, and then learn from it and take my, want to be the best at this age and just turn that into fuel to just do better every single day. So absolutely agree with you on that. And very much it is like just start, right? Like I think for a lot of people, if they had started maybe 5 years ago, they probably could have caught some of that 2020 upswing. But I think the sad thing that happened was so many people didn't start that they actually took so long to get in 2020 because there was like, oh, the stock market's run for a year now, and now seems like a great time, and then they kind of got messed over in 2021, and then especially towards the end of it, may have even come out lost all their gains from 2020 2021 in total because they just really didn't, start at a certain time. But now I think you got to just flip that mindset. Even if you're down 30, 40, 50%, you have to flip back and say, okay, I learned the lesson. I understand now, and I have a better feel for this, and I'm in. And now I'm going to look for the next opportunity and just like stay forward looking. So really good stuff. Appreciate you, sharing that all with us, Colin.
Yeah, for sure. And I guess one last thing is like if you're one of those people that you're waiting for the market to, you're like, oh, I'm gonna wait for it to crash, I'm gonna buy or whatever. No one knows what's gonna happen in the next tomorrow or the next month, the next year. But if you go over the long term and you're worried, and you're like, I don't know, like the market's down, it's you aren't sure what's gonna happen. Go with a broad market fund and S&P 500, for example. And I tell people this, I'm like, hey, just put your money there, and in 20 years check back, and if it's at zero, then we have a lot of other things to worry about than what's in our investing accounts. So just that's all my message every day when I get on this Bird app is to tell people just to start. My goal is just to get people to start because once you get started, once you see it, whether your money's going up or down, obviously we always want to go up, but that's not the case. But once you see that money start working for you, that's kind of when the light bulb hopefully turns on and things start to roll the right way.
Absolutely. Well said. Awesome. So if you haven't already and you're in the audience, if you're into all these type of things, right? Building wealth, financial literacy, fundamental analysis, dividends, crypto, all these different areas we've been talking about, we have a pretty carefully cultivated panel up here. Just going back. So Andy, we recently, more recently have connected, but we even had the opportunity to meet in person. But Decade Investor and Dividend Hero were two of the first people that I really associated with on this platform, I would say. I think we've been chatting for almost a year now. And then Stock Market News, same time-ish around like that March area. So if you're not already checking out these people, they all really have great long-term mindsets, but keep track of things in the short term so they can constantly be adjusting. And I highly recommend throwing them all a follow. Again, very carefully calculated panel up here of experts. So, and we got Stock Talk coming in hot. So with that being said, what's up, Hero?
I was just gonna say thank you for the kind words. You do a lot for Twitter and hosting these spaces and everything, and you bring the community together. So it's the least we can do to be consistent with our content, and you kind of rein us all in and tie us all together and make this all worthwhile. So I appreciate you saying those things.
Yeah, absolutely, man. I really do mean it. I've seen you guys, just for anybody that's listening, we had this big growth run up in 2020, right? And I knew these guys and I was, chatting with them from, really the beginning of 2020, like right when that started going. I mean, in the pandemic, like we were all I feel like it was like right at the end of 2020 was when I got on Twitter, right? September. So I found these guys a couple months in and we have this big run up, right? Growth companies that are complete pieces of S are just flying. And these guys never wavered. Like they literally were like, this is my strategy. These are my stocks. They have great fundamentals. I don't care about your next, company that's building, freaking lithium ionic, computer science rockets and has no product to show for the next 5 years, but has a multi-billion-dollar valuation. Like, these are my companies. And these guys stuck with it, and that's why they came out and they made bank in 2020 and 2021 because they're heavily in, the right index funds, the right dividend fund, and all these right areas. So really, really do love what they're doing. Okay, let's get to the crypto side of this. What's up, Andy? Fill us in. Give us the layout.
Oh, hello. Hi. Greetings. Hello, everybody. Thank you for being here and listening in. If you don't know me, my name is Andy, and I talk a lot about crypto here on Twitter and on my YouTube channel, which is also the same name, Your Friend Andy. That's me. So I am not a Colin of the world who at age 20 something started investing. I'm a very slow to progress person with a lot of things in life. I had a late start. I did a couple of victory laps in college. Had some fun doing that. Not a great first job out of college. I got my first job right after the 2008 crash and all that, and racked up tons of debt on credit cards and stuff, and had no real idea what I was doing with money, and just kind of a mess, But then things started kind of clicking with me. So I kind of realized, hey, there's a problem here. I started taking responsibility for my finances. I kind of had this realization that, finances are not something that are happening to me. They're something I have control over. And so I started kind of turning my financial life around. And so at a very late start, again, probably around age 29 or 30, I started wrangling my finances and paying down the debt and budgeting and then investing. And then that's when everything kind of started coming together. And I've gone from, nearly six figures in debt and no investments to my name and no budget or any meaningful understanding of money to multimillionaire in about 8 years, a little less than 8 years. And a lot of that is thanks to this magical internet money, cryptocurrency, which, I first was introduced to in 2012 or 2013, and I thought it sounded stupid. Well, that was a mistake. And then I was introduced to it again in 2014, and I tried to build a mining rig and figure it all out. And it was just too much for me to take at the time, working my 12-hour days startup job. And then finally in 2017, for whatever reason, it finally just clicked. And I just kind of went gung-ho into it. And if I can just reiterate what has already been said, when everyone around you is saying, don't do this thing, or the time has passed or whatever, but you're absolutely convinced it's the right way forward, it's the future, and you are able to, stick to your guns, listen to your gut, follow your conviction, and chase these things. And if you happen to be right at the end of the day, that's powerful. Having a long-term mindset. If you're someone who jumped into the world of investing in the last year or two, and then all this current turmoil is, very scary. Well, the big differentiator in your life and in your investing is going to be what you do with what's happening. In 2017, 2018, I jumped into crypto, and then I watched it all just, rocket went way up into the stratosphere and then very quickly came back down. And everyone just kind of said crypto's a scam. You lose money in this. It's not going to pan out, and I give up. And the majority of people who got into it around that time eventually kind of gave up. And so a lot of people right now are giving up and thinking, oh, it's all over. It's going to keep going down, whatever, blah, blah. But the people who really believed in it and said, no, there's something here. I made some mistakes. I lost a bunch of money. Now, how am I going to learn some valuable lessons from this and then actually execute on those lessons? That is where the money is made. So during that time, 2017, 2018, watch all these coins and fancy things I did not understand at the time, just watched them go to nearly zero, drop 80, 90, 99%. Some of them did go to zero. Watched all that. And I said, okay, I need to take a step back, stop putting so much money into this, just buying whatever people on Twitter or on YouTube tell me to buy, and actually decide what my values are here, what I believe the future is, and where I think it'd be smart to put money. And then I started just learning as much as I possibly could. And I started putting money where my mouth was, where my beliefs were, where my conviction was. The more I increased my knowledge and understanding, the more conviction I had in certain areas. And so basically, my strategy was I funneled as much money as I possibly could. And I wasn't making tons of money at this juncture, but as much money as I wasn't spending on the mortgage or groceries or what have you expense, I was just dumping into crypto and some in traditional markets and stuff, but a lot into crypto. And I just did that for the long haul for years, from 2017 until now, still buying, still dollar cost averaging. And, that has makes my portfolio has just kind of blown up in the past several years. It's down considerably right now, but it's still up by a huge margin just from a few short years ago. And so, yeah, I think the long term mindset is one of those things that if you can actually like internalize that and follow that, because I know it's cool on Twitter to say, I'm all about the long term mindset, but then we're all looking for what's the next crypto project or next stock or whatever's going to blow up in the next week. It's cool to say those things, but to actually do it is a totally different thing. And if you can manage to actually do that, I really believe you can have kind of life-changing things happen. I'm not, I'm not a genius. I'm not especially a smart person. I'm just kind of a normal person. But I've had that long-term mindset, and I've tried to make as smart of bets as I possibly can, and that's worked out very well for me. Not just worrying about the short term, and of course now that I have this kind of base of understanding of these things, and I have a pretty sizable portfolio in the crypto space, I have a big focus on one, continuing to build the foundations that I love, things like increasing my Bitcoin position and some of my other top positions that I'm a big fan of, and just doing the fundamentals of putting money into it and building that base. But then also I've got this I'm kind of hyper focused on building as much crypto passive income as I possibly can. Just a year ago, my crypto passive income was probably less than $1,000 a month, and and next month it looks like it's going to be a little over 30 grand. That's being paid passively through all these various projects and things I'm into, and I'm just trying to build that crypto passive income portfolio to put these rewards into my pocket automatically, and try to build some kind of strategy going forward that, one, pays me, but two, finding the things that can survive corrections like this, future bear markets, future crypto winters. And so I'm doing everything from GPU mining cryptocurrencies. I'm running various hotspots and devices that let you earn on various networks like Helium. I've got a bunch of cryptocurrency projects that have nodes of some kind, these validating nodes or infrastructure nodes or what have you that all pay. There's just interest accounts and various DeFi stuff. There's all these interesting avenues out there right now that I'm just looking at, and I've built this this machine that's putting this money into my pocket passively every month, and now I'm making more with that than in one single month than I made in an entire year with my first job out of college, which is just kind of this wild thing to me that I can't believe is a reality. But that's why I love crypto so much, is there's so much depth to it, to the space, and there's so many opportunities. And I really believe that it's this kind of once in a generation kind of investment. It's this once in a generation kind of an opportunity. It's going to continue to be a fantastic opportunity into the future. But right now, if you try to jump into DeFi, you don't know what you're doing, you try to jump into crypto, it's not easy. It's a lot easier than it was 5 years ago or 10 years ago, 13 years ago when Bitcoin first got its start. But it's by no means easy. It's we're not quite there for full-on mass adoption yet. We're getting close, but we're not there yet. But what that means is when things are harder or tougher to figure out, there's less people get into it. There is a lot of upside. By the time it's so easy that your grandma is trading Bitcoin on with her trading group on Discord or whatever, by the time it's so easy that that's happening, all the upside, the majority of the upside is gone. Still great opportunities, I'm sure. But I just really believe the time we're in now, these next 5 or 10 years or whatever it's going to continue to be, there's so much incredible opportunity and money to be made, and just setting yourself up and your future generations with this kind of generational wealth in this whole space, because I believe it's the future. I believe cryptocurrency is going to just take over the financial markets and the world. I think we're just getting started. I think we're just kind of edging into seeing true mass adoption and true adoption across companies and institutions and governments. I think we're just on the precipice of this whole new revolution, and I'm very excited to be a part of it. So anyways, that's a little bit about me and what I'm into. Thank you again for having me on here.
Really good stuff, Andy. And I think we are gonna, go to Stock Talk real quick and stock market news. But when we come back around, maybe similar to what I asked Ross, if you have maybe like 2 or 3 specific opportunities that you want to highlight, that would be awesome if you're comfortable sharing them.
Sure thing, man.
Okay, perfect. Awesome. So Stock Talk, I asked you to come on here to talk about momentum trading. If you also want to hit on a little bit of technicals that you personally use, that would be great too, because we don't have anybody really specifically covering technicals tonight. But yeah, the floor is yours. Would love to hear from you.
Yeah, man, I'm willing to talk on anything, but yeah, if you want me to cover momentum trading specifically, I think it's important in a market like this where we have so much chop, for everyone to know how to do that. And coming from a financial literacy perspective, obviously, a lot of people in here may be investors. I know that we have some dividend investors here and some long-term crypto investors, and again, I have an investing account as well, and I think that finding opportunities that you think will appreciate constantly over the long term is a smart idea, regardless of what level of exposure you have in the markets. But, during chop like this, where, we saw the NASDAQ go down 17.5% from the highs as of last week, obviously the rally on Friday and today changed that narrative a bit. But, we saw that, and we saw the S&P down, almost 11% from the highs, and a lot of chop and consolidation along the way. What happens in climates like this is a lot of individual stocks, in a variety of sectors, get cut down when the indexes are weak, and they don't recover equally when the indexes recover. And so what that creates is it creates a disparity in the efficiency of stock picking. It's the reality of why so few stock pickers, at least on a percentage basis, outperform the market, because typically the market itself can continue to trade higher. And when you're talking from an investing perspective, and you see people in this climate say, these prices are steals, and if you buy your favorite stocks now and wait 10 years, you'll be rewarded. That narrative is just not true, especially with individual stocks. If you're buying the S&P 500, or you're buying a major index fund that's weighted broadly across the market, that may be true. But as far as individual stocks go, it just simply isn't. And so knowing that, knowing that you're going to participate in volatility along the way, knowing that the IV is increasing in situations like this, knowing that the volatility is increasing, and knowing that high beta performers, while they may lag the overall performance of the indexes, make significantly bigger moves intraday. And so if you're looking, as a trader, and if you're not even a trader, but you're an investor who views their portfolio every single day, as in most investors that I know do, you're kind of doing yourself a disservice by sitting on your hands or being a bystander to the action. So that's why I think momentum trading, or being able to trade trends at the very least, is so critically important, because it allows you to capitalize on volatility in the meantime. And, a lot of people think that participating in that sort of short-term trading bars them, or somehow, logistically prohibits them from investing as well. And that's also not true. I've been trading and investing for 10 years, and I've had an account for both pretty much the entire time. And so there are companies that I identify at certain points of their life cycle that I become bullish on for one reason or another. Tesla is always the example I bring up because it's, one of my more successful investments, and I bought that in 2015, 2016, and have been riding it ever since. But then there've, been a lot of great trades as well along the way. Stocks that I necessarily didn't want to own for a long period of time, but found opportunities to trade them either on the upside or the downside. Having the tools to do that as a trader along the way are critically important. So, I think FinTwit really misrepresents the idea of momentum trading because so many people get bagged by it on Twitter that there's really a negative connotation. But the reality is with adequate risk management and ability to generate these trade ideas on your own, if you truly are strict with your risk and profit management, it is equal risk to anything else, right? Like a common criticism, I'll say, of growth stocks and high beta stocks is that, the notion that it is higher risk inherently to trade and invest in high beta growth and tech stocks. That is the narrative. That's, I think, a commonly accepted narrative. But it's bullshit because the reality is the stock market is the only place on earth where you, as a decision maker, have the ability to control your risk. Every other betting climate on earth doesn't work that way. Sports betting doesn't work that way. Betting a casino doesn't work that way. Betting on anything else doesn't work that way. But in the market, you can make bets on companies and you have full control over deciding how much money you want to lose. And that ability to control your risk inherently makes the RR skewed in your favor. But the crux is that you have to make the decision to control that risk. And that may seem like an obvious thing, but that's where 90% of new traders that at least I talk to fail, is that they go into the trade with the good intention of managing risk and, controlling their losses, but they either get greedy or the stock goes red and they hope for a bounce or any number of reasons that make them end up defying those rules. And the reality is, if you're a trader and you're going to take, let's say, hey, over the course of my trading career, I'm going to take 100 losses. And the number of your losses doesn't even matter because, you as a trader, whether you're a trader or an investor, right, regardless of what you are, you're going to make calls that are wrong. Investors sometimes identify companies they love. They dollar cost average into those companies over 2 years. And then 3 years later, the company's down 60% from the highs and they're bagged. Traders do the same thing. They hold a stock, they buy it. It goes to their stop loss. They're like, you know what? The stock's going to bounce. I'm going to keep holding it. It goes trades lower and lower and lower and they're bagged. Right. So it happens on both sides. So if you just logically look at the scenario and you say, as a trader or an investor, I have the opportunity to manage risk, and I know that I will take losses. This is the biggest thing that every trader investor needs to know. You have to tell yourself and convince yourself, I know I will take losses, because no trader or investor has a 100% win rate. And so knowing that you will take losses, why wouldn't you control them? If you were placing a sports bet on a money line on a sports game, would you not take a stop loss if the casino offered it to you? Every single person would. So why wouldn't you do it while you're trading? And the reality is, this is a principle that I've spoken about for trading a lot, and many investors tell me it's not the case for investing. I disagree. There should only be 3 outcomes to any investment or trade that you make. Only 3. You should either win big, win small, or lose small. That's it. Losing big shouldn't even be an option. It shouldn't even be an option. And if you stick to those rules, if you stick to those 3 rules, I either win big, I win small, or I lose small, the chances of you being consistently profitable are exponentially higher. Because the number one reason that people blow up accounts, go into the red, throw away profits, have a negative trading year, all of those reasons are because of poor risk management. No one has ever blown up an account with proper risk management or disciplined risk management. It's never happened. It's always somebody either aping into options or averaging down or averaging into a stock that they have